Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, January 28, 2015. You're looking at a daily chart of the SPY, and we had a pretty darn good sell-off day today. SPX, or S&P 500, was down over 27 points. Dow was down about 2 bills, 195. And NASDAQ was down just under 1%. And the transports got crushed. So, what's going on? Well, if you allow me, I'm going to go to the E-Mini Contract, and I'm just going to talk about it. I don't have it on this chart, but I'm going to talk about it. A couple of days ago at least, I began mentioning that the downside target for the E-Mini was 1997, and we were pretty far away when I told you that. I'm pretty sure I started mentioning that up here on the SPY, which would coincide with about 2050 in the S&P futures or E-Mini contract. So I was getting that indication, and we got there today. Now, the time frame would have been better served if we got there tomorrow. So in my work, time is always matters more. Time to me is better than price. I would rather have my time factors with me than the price. Okay, I'm going to rely on when a market gets to a certain point in time versus what the price is when it gets there. So that being the case, what I'm going to say is my next lower number that I have in the S&P E-Mini contract where I do all my heavy work is 1977. Okay, so let's translate that into the S&P or SPY contract. And it basically, ironically enough, comes down to about this low. Okay, between 198.60 and 199, in that neighborhood. Okay, so what's interesting is I drew two trend lines in here. We've had this one for a while, and this could hold, and we could pierce it a little bit, but it could hold. But if this doesn't hold, okay, and we're in that sweet spot for, 1977 could also mean 1975, 1974. I get a number in my calculations, but that doesn't mean the market has to stop short at that number. We can overshoot. Today we overshot the 1997, and we overshot it by enough to where I get the next lower indication of where I think the market's going to go, and that's 1977. So if we overshot it by a point or two, then I would say, we're still on target for the market to bounce. But the problem is, let's go back to time. Tomorrow, plus or minus a day, was really the day. So today's the minus a day, and that's okay, but tomorrow is really the better day. So what I'm trying to spit out here is I think the market may want to visit that 1977 number in the S&P E-Mini contract, which coincides with around this pivot low. And if that happens tomorrow and that holds, it has to hold, right? That's the key. This has to hold on a closing basis tomorrow, okay, or any day for that matter. This has to hold, which is 198.55. Okay, if that doesn't hold, all right, and if that doesn't hold, most likely this will not hold. Okay, this trend line here I drew in, which is at 197.86. Then we're going to have to go down and visit this area here at this gap window at 191.48. And in this area here, the market should find a pretty high level of support. And here's where that comes from also. Right in here, I did the calculation before, but right in here is your Fibonacci 618 retrace in this area here. And being that the gap window area is just underneath that, I would think that the market would overshoot the 618 and want to come and test this gap window here. And that's kind of the way I'm going to play it if we don't hold here on a closing basis. I think then the next move is down here, and we'll have to take that one day at a time. And if we do hold this line, okay, on a closing basis, let's say we hold this trend line on a closing basis. Let's look at the flip side. What happens? If we hold this line at a closing basis tomorrow and we have somewhat of a pause day, maybe even a slightly up day on Friday, then I think we get follow through next week and maybe beyond, because remember, here is a weekly bottom, okay, in my book, for the stock market, which means that we should see a 2 to 3 week rally off that market. So as long as we stay inside this low, okay, on a closing basis, I think that rally is still intact. If we close below this level on a closing basis, I think that rally's off the table. So that should give you a pretty good guideline of where the expectation should be on the market. It's kind of an if-then statement. If this happens, then this is the likely scenario. If we break this level, we're likely going down here. If this level holds, this trend line here, okay, on a closing basis, a daily closing basis, then the likely scenario is we do move higher for a week or two, okay, and we'll take that one day at a time, but just for now, that's the if-then statement, okay? All right, so just as a quick wrap, we hit the number maybe a day early, but it's always plus or minus a day, but that's pretty much close to on time. I said later this week we would hit 1997 on the S&P E-Mini. We hit that today. Now let's see what happens based on everything we just talked about, whether it holds or not, and we'll just play it one day at a time, and we'll take what the market gives us. All right. So let's go over to the gold market, and let's take a look at GLD. All right. Here we go. So GLD had somewhat of a little bit of a pullback today, and the market's again down in the Globex session at 1282 on the gold futures contract. I'm now looking at the April contract, okay? So we've got a low now, a low for the day, a low for the session here at 1282.60. Here's what I think is the likely scenario in the gold futures market. We're probably going to come down to about 1275, maybe not even 1277, something like that. And if that holds, and hold mean if you're watching the gold futures market just by chance, those of you that do, I know some of you do, holding means if it closes the hour above that level, let's say 1277. If it goes down and it hits that level, but it closes the hour above that level, and then it closes the next hour above that level, the likely scenario becomes we go back up to 13, maybe even a little higher, 1300, maybe even a little higher. And what that would mean is down here, if it happened during the day, we would get maybe down to this 1250 level again. 122.50, excuse me. And then we would probably take another shot up at the 1300 to 1305 or so level in the gold futures, which brings us back to the 125 and change on the GLD. And I don't think we get above there this time. I think we'll kind of go back and forth for a while, but there are higher prices ahead. And I know some of you are holding gold for the longer term, and that's fine. There are higher prices ahead, but we certainly could test lower prices first. But right now, we're probably a stone's throw away from another level in which, if it holds, being that 1275, 1277 area, if that holds, and tomorrow we find ourselves above that level tomorrow, then you can bet we either have tested tomorrow or we'll go up and test over the next day or two 1300 again. So if it happens during the day, during the regular session, or if you play gold futures, you can keep your eye on that, see what happens, see if that scenario plays out. Let's go over to the gold market, the oil market. We'll go over to the USO. And again, there's nothing doing. It's just a crazy market. Gold, I keep saying gold. Oil, crude oil, I'm looking at the March contract. Crude oil is 44.42. Okay, we've had a low of 44.34, and this is in the overnight session. Okay, so I have a number worked out now. I did a lot of work on this over the last couple of days. And I keep coming up, when I do my calculations and I do the same calculation, or I'm trying to get the same result, but I get there different ways. So let's say I do 3 different or 4 different types of calculations, ways to look at a market in different time frames, and I come up with the same number. as a target, then I start to believe in that number. And I'm starting to come up with a number of 43.70 on the crude oil market as a potential low, not the all-time or ultimate low, just a low that should hold, and we should see a rally from that low. And guess what? We're less than $1 away from there now. And over the last few videos, I've been saying, I've been discussing how I think we're getting close to where the sentiment is ripe enough to where gold could begin to give us the signal it's putting in the bottom. So I'm not saying it put in the signal yet. What I'm saying is I have what I consider a mathematical number or a mathematical level that I see that the oil market could get to in this particular March contract, 43.70. We're really, really close to that now. We're basically 73 cents away. And, I'm kind of almost licking my chops because I want the market to show us it's putting in a low around that number. So maybe we dip down to that number and then rally off of it on high volume, finish at the high. That would be an ideal scenario. Hitting the number and showing us signs of a bottom and putting in some kind of a definitive, at least intermediate term bottom, short term bottom would be a fantastic trade, because if that happened, if we hit that number and finished on the high of the day on any kind of volume, I would suggest buying that market for a while. And watch it bounce at this stage of the game. Not out of the question, $7 to $10. Not all at once, but certainly $7 to $10 would be in the cards. At least $6 or $7 minimum. Anyway, all right. Anything in my notes here? Bear with me. Yeah, just one more thing in the notes. Back to gold for a second. I have a note here. I did some work on gold as well, and I show my time factors. So my cycle work, I show what would be a weekly top for gold. I'm sorry, check that, a monthly top for gold, which means that we could see another decline for a couple of months in gold, maybe 2-3 months. And the monthly top is due in the month of February. But understand this. Don't sell it now based on that, because usually you'll rally into the period when a monthly top is here. And I'm not saying it's February 1. I'm just saying a monthly top is due in February. It's hard to pinpoint the day of a monthly top. We have to let the market show us it's putting in a top. But we'll usually rally up into the period when a monthly top is being put in. So that's not upon us now. So I wouldn't consider this a monthly top. I wouldn't consider that 1308 or 13, I don't remember the exact number it got to, 1308 or 10. I wouldn't consider that the top. I think we do go higher before that top gets put in. So I just put that in my notes. I wanted to make mention of that. I think that's good for tonight. That's about all I have. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.